Gautam Chhaochharia is with us. Gautam, hi, good morning. Just wondering what to expect from the upcoming earnings season. Do you think the market is going in extremely with muted and tempered expectation? And do you think it's going to be a very, no surprises kind of quarterly performance this time?
Good morning. I think the market's beyond just expectation around the quarterly earnings. What they would be looking at is for commentary on underlying demand trends per se. Everyone realizes the impact which GST can have on supply chain, and therefore the reported numbers can be interpreted either way. But having said that, yes, the expectations are not running very high, specifically given the commentary we have seen around last month odd in the media and even the corporate commentary around demand, GST disruption, etc. So expectations are not running high definitely. So in that sense, the reported numbers, if they're not really great, will not matter much for the markets. But I think for the market, underlying demand trajectory commentary will be far more relevant to set the direction for markets here on.
Yeah, indeed. So Gautam, where do you think the positive earnings are going to be, and is it going to be the usual suspects, metals, private banks, which are going to be the leaders?
Looks like. So again, you do get high frequency data points. So you have seen auto sales numbers, reported numbers being fairly robust. Private banks you mentioned, the credit growth trends looks okay. So the usual suspects should deliver reasonably okay numbers. But having said that, as I said, what would drive markets would be the underlying commentary on the underlying demand. So because specifically in this kind of quarter where there is so much disruption and the reported numbers can be influenced by supply chain issues, which is not necessarily reflective of underlying. So my sense is, talking to investors, they would be far more focused on the commentary.
But do you think this GST transition is going to be a huge black hole when it comes to that underlying demand pickup? Because auto sales do not seem to be reflecting any sort of gap. You've also got, for instance, the Shobha developers, wherein the second quarter sales have been at a 10-month high. So seems like, at least in bits and pockets, that underlying demand is pretty resilient. GST, demonetization, or none.
So that's been our view, that even though our view has been that economy per se will not pick up in a big way in a hurry, but whatever trends we have been seeing for last 2-3 years will sustain, and GST and demonetization are over exaggerated in terms of their impact on the broad economy and markets in our view. Because if you look at very simplistically, they do have some impact on the supply chain and therefore the reported wholesale numbers. But the underlying retail level impact is arguably going to be limited, because GST or demonetization may not cause any permanent dislocation or damage of demand unless and until they cause broad-based job losses. And as per our anecdotal checks, etc., and even one of the surveys we had done recently using Evidence Lab, it doesn't look like any broad-based disruptions here. There are obviously anecdotes and stories here and there which gets amplified, but there doesn't seem to be any broad-based disruption per se from GST.
So what's in store for the market then, Gautam? Considering we're going in with muted expectations, it's pretty known where the good and the bad is going to be in terms of earnings. What's the market trajectory going to be like for the next 3 months or whatever, 5-6 months to come? Do you think it's rather consolidative, maybe a time-wise correction would play out in the markets? Because the devil is already out there.
So I think more than the fundamentals per se, because fundamentals on the other hand, on one hand are holding on strongly, on the other hand we're still seeing a lack of a broad-based economic recovery per se, and we'll still see earnings cuts. The estimates are still high, even though 2Q will be okay. So the more than the fundamentals, what has been driving Indian markets over last few months, and what could be still the delta for the markets would be the local flows. And as of now, the local flows are still benefiting from historically positive 1-year, 2-year returns for investors, and that could well continue for next 2-3 months. So the only negative surprise, if at all, could be any unforeseen shock globally or locally. So ex that, I think the markets will be broadly okay and reflect the flow trends rather than fundamentals. Does that mean markets will go away up in a hurry? Also depends on the flows and global factors. Fundamentally, our view is that markets are overvalued. The risk reward is unattractive, and in our base case framework, the fair value for Nifty still remains 9,000 for December 17. While the upside scenario is around 10,000, that's where the markets are already at.
Okay. Gautam, expectations this time are diluted from the earnings season. So do you think little bit of surprise can really do the trick for markets?
It would absolutely. So even a little bit positive surprise, if backed by strong local flows, can obviously help markets rally.
Gautam, when do you think the cycle will start turning for PSU banks?
So for PSU banks, I think the two missing links are still the proper cleanup of books and secondly recapitalization. So if we start seeing one of them play out with a lot more clarity and visibility, then the cycle could turn. But again, there are longer term issues which still is an overhang for the markets about their ability to compete in the new era of banking. And again, some banks are doing a good job, but those things will come later on, given where the sector is in terms of valuation, etc. Visibility on a proper cleanup or recapitalization itself could draw a cyclical rebound in the stock prices.
Gautam, if I look at UBS's most preferred list, and Titan clearly is one of the top slots over there. Do you think the latest GST tweaks coming in on Friday after the 22nd GST Council meeting are going to be materially, exponentially beneficial for some of these jewelry companies, a PC Jewelers, Titan or whatever?
So can't comment on individual stocks, but yes, at the margin, yes, last week's tweaks are in the near term positive for the jewelry sector. And even our evidence lab survey suggested that within the jewelry segment, the preference towards brand and move towards brand, including within say a category of marriage jewelry category, that's happening quite fast, and that's at the margin a positive surprise versus what we were baking in earlier.
Okay, so Gautam, do you think we've peaked out for this fiscal?
In terms of earnings or markets?
No, markets.
So again, fundamentally, definitely, but as we have seen over the last few months, markets are being driven more by underlying fundamentals. It's driven more by flows, and that argument still holds as a positive for the markets rather than negative unless things change.
Gautam, you've been bearish on IT as a group, but now is it time to suddenly revisit, let's say, even a name like Infosys, because valuations are really attractive, and whatever could go wrong has gone wrong. There is a buyback cushion which also would be there, and I was looking at the data points for Infosys about 2 weeks ago, and according to my numbers, Infosys has a dividend yield of 2.5%. So my point here is that IT stocks are unlikely to lose now.
So yes, so we have been bearish for last 3 odd years, but a few months back we did turn tactically overweight IT services from a strategy perspective. And unlike last 3 years where we did not have a single buy rated name, we do have a couple of buy rated names in the sector. So yes, we do think tactically it makes sense to be overweight IT services. One, exactly the point you mentioned, that the risks from digital, the near-term demand headwinds, etc., they're all getting priced in, and we saw in the first quarter numbers also, while the numbers were not great, but they did not miss expectations. So from that technical perspective, the stocks can do well from here, at least in a relative context for sure. And the recent currency move is also at the margin helping the sector sentimentally.
Would you say the same about pharmaceuticals, wherein the prospects look a little better, Gautam, now for pharmas, especially given the spate of US FDA approvals and the EIRs which have been coming in off late?
Possibly, but we still haven't seen, unlike IT, expectations being met or not disappointing in terms of actual results. Yes, the news flow definitely seems to be bottoming out, but you have to be far more selective. So the work our pharma analyst does is is break it up into different exposures, and in our view, the traditional US generics model, that's a far more tougher environment to be in, despite the FDA issues, etc. So you have to be much more selective in terms of which products or which category of products they are exposed to in the US, and then look at the rest of the business model. So pharma, I won't say a broadly sector level call to say that you should be tactically overweight, but selectively you could look at names. As a sector overweight overall in a portfolio, we remain neutral on pharma, but we do like a couple of names there.
Gautam, the big newsmaker this morning is N. Chandra, with his latest aggression now being at the top of the Tata Group. He's talked about all that he wants to do. He's planning to prune the portfolio, create new groups, support Tata Steel, Tata Motors, TCS, Tata Tele, wherein he's categorically said that, would be interested to get out completely of the wireless business and say goodbye to 110 companies on board. What is it that you've made of this fresh, renewed vigor which the Tata Group is now going to be operated with under Chandra's legacy?
So it looks like a positive welcome step in terms of getting the group towards a more shareholder friendly focus, which is definitely good news both for the large listed companies which we end up covering and for the group as a whole in terms of focusing on the right business metrics. So definitely a positive for the group, and I would say even for the broader markets that we are seeing capital allocation moving towards the optimum mix from a business perspective, so which generally holds a positive tone for the overall markets in the minds of investors.
Sure does. Talking about TCS though, Gautam, I know you've already highlighted your view on the IT sector, but TCS is going to be coming out with its earnings just later this week. What's the expectation largely in terms of earnings from the IT pack?
So the IT pack earnings expectations are not very high, specifically given the environment we have seen in terms of demand. What will be interesting now is, do we start seeing any change in guidance in terms of the demand outlook? Because earlier in the year we did expect a possibility of some uptick in guidance based on US bank spending, etc., which didn't really materialize. So what we'll be looking out is if there are any signals towards that. And secondly, also the entire move towards digital. I think investors will also closely track how quick that transition is.
Yeah, indeed. Okay, let's talk about some of the other sectors as well. We've been talking about the kind of strength that you've seen in some of the auto sales numbers. Okay, in the meantime, my producer tells me while we were chatting with Gautam, the Nifty is back at the 10,000 mark. It's been a struggle to really make it to that 10,000 level. Considering the kind of consolidation which is playing out in the market after the recent correction start of the month, and now we've made it to that 10,000 mark. On Friday, we made a dash at that level after, breaching that slippery wicket of 99.50. We were unable to cross that hurdle, cross that on Friday, made it to that 10,000 mark. Today as well, after a quiet start, while it's not a big percentage move that you're seeing on your screens, it's only up 25 odd points, but yeah, psychologically, we are back at that 10,000 level, and it's a wee bit of a pickup coming in for the broader markets as well. So Jindal Steel is holding higher, almost a 5% up move coming in there. Titan is looking good by about 4.5%. JP Associates is holding out. KPIT Cummins, PC Jewelers as well as looking good by about 3%. From within the Nifty, it's Tata Steel, Tata Motors, TechM, it's all the Tata Group. All it takes is for Chandra to come out in the open and be vocal about what his strategies are at the group. And then of course you've got ICICI Bank as well as L&T also supporting the move on the index, along with and Infi as well as Bajaj Finance and IOC also, which is currently holding out in trade. Gautam, how big a positive do you think has been the recent spate of news on the OMCs, the fact that excise duty is going to be cut by about 2 rupees on both petrol as well as diesel? Do you think there is reason for enough investor confidence that the move is going to last for the next few months as well to come on OMCs? The fact that the government is now not going to intervene in the daily fuel price mechanism?
So we don't have direct coverage of the OMCs yet, given our analyst transition. But yes, from a broader government commitment perspective, has definitely been a positive and reassuring for investors that despite oil prices shooting up, we haven't seen a wavering of the commitment towards the deregulation process. And again, it's a very tricky thing to be completely convinced about for investors. What happens if oil goes to 70 or 80? But what's giving investors a lot of confidence is also their comfort level about oil per se. So I don't think investor set is expecting oil to go up to $80–90 in any which way. So that's giving them a lot of confidence about the commitment to deregulation, and obviously the recent commentary from the government and steps is helping them maintain that confidence.
The currency weakness, is that an irritant if not crude?
Not really. If you look at trade weighted basket, RER, or the currency versus other emerging market currency, so nothing out of whack per se. It's a very small move for us to really worry about in any meaningful way. It's a small move, not really worried. If you look at the current account and external parameters, still very comfort and robust. And unless we see a strong pickup in imports, either because of oil prices or because of pickup in economic activity, I don't think we need to worry about currency too much here.
Good to hear that, Gautam, and good to chat with you as well. Thanks much for taking the time out and joining in today.